So, thank you very much for joining us today on our next Radical Truth podcast. I'm honored to have Christoph Klink, who's one of the partners of one of the leading startup accelerators and incubators in the world called Antler. For those of you that are not familiar with Antler or Christoph, tell us a bit about who you are, your journey that kind of brought you here, and what is Antler and what are they trying to do, and kind of fill in some of the statistics, which are quite impressive for those that are not familiar with you. So again, thank you for doing this. I appreciate it. And I'll go on mute.
Thank you so much for having me, Robert. A real pleasure, and looking forward to our conversation. So as you already said, my name is Christoph. I'm a partner with Antler. I joined Antler pretty much 5 years ago. For me, the start of this pandemic that originated somewhere end of 2019, early 2020, was one of the catalysts actually getting me to really committing and starting something completely new. And what we do is something that we call day zero investing. So there's two elements to that are quite important. So one is we are an investor, a venture capital investor, an early stage venture capital investor who looks to back technology companies and, more importantly, the founders behind that. And we're gonna speak about that a little bit more, I guess, about kind of how we think about founders, how we think about companies, what technology means for us. But the second element to that is that we typically start doing that at day zero. And for us, day zero really means at inception of a company, at incorporation of a company. And if you want to do that, you have to inevitably start working with founders even before that day zero. So what I do every day, all day, is I try to find really strong individuals that are working on something interesting, new, exciting, and more importantly, something where they are a much better fit than I could ever be in order to build that company. Right? Those are people. The founders that we work with on average have 10 plus years of previous experience, and they very frequently come from a place where they've been banging their head against the same wall of a challenge again and again and again. And then at some point they figure out, I can't find a solution, I can't build a solution to that where I am right now. I actually have to leave this place and start something of my own where I have all the freedom in the world to actually start working on solving this problem, build technology to solve this. And those are often people who kind of are knee deep in a problem area that at least I, prior to that, haven't been losing a lot of sleep over. And I feel personally very privileged in having the opportunity to do that, because what it really means is that I get to work alongside very many people that are a lot better at doing what they do than I would possibly ever be. And when you think about all those daily interactions that I have with founders, speaking about what they're working on, what kind of problems they're tackling, what kind of problems they're zeroing in on, and how they want to tackle them, then it's both energizing as well as humbling to me, because you learn so much about all sorts of different sectors. But that's one part of what I do. The second part of what I do is I then kind of have to figure out which of those founders, which of those companies should we actually be backing with capital right at that day zero, and then in subsequent rounds. So we now have the capability, or not by now have the capability, of investing into companies all the way through Series C. So for the first, let's say 5, 6 funding rounds, and we do that around the globe. So we have close to 30 offices around the world. We have so many offices not because I like to be based in Berlin, which is where I'm based, and one of my partners likes to be based in Austin, and another one of my partners likes to be based in Singapore. It's rather because at the point where we start working with founders, we have to come close to them That's our core belief. So in order to actually be a great partner for founders at that super early stage of building their companies, we have to come to you, to the founder, in order to qualify to being a strong partner. So we do that, as I mentioned, in, I'd say, the major entrepreneurial ecosystems around the world. And we've built this platform relatively quickly with a global range because, one, we do believe that we're much more useful to founders when we're not only focusing on backing companies in Singapore or Southeast Asia, which is where we originated, but that we can actually connect talent, connect companies, connect investors, connect operators, connect then kind of additional capital across those various individual ecosystems. And for me personally, before starting to do that every day, all day, I tried to do the same thing on weekends and in evenings. So invested as a business angel, figured out how exciting it actually is to be a small part of exciting journeys of really, really strong people that are building great technology to be solving urgent issues, but also figured out how hard it actually is to be investing in that early stage if you don't kind of have a real institutional skill set backing toolkit behind that. So in order to have a bit of capital to do so, I was a partner with McKinsey, worked mostly on, in one way or another, merger and acquisition related questions for technology companies in Europe and North America. But I never had that one product that I thought was so super interesting. So I never said, I only want to work in payments, or I'm only interested about logistics, or I only care about mobility solutions, or whatever it might be, right? So I never had that urge to say, hey, my career will always be in this or that, or in this or that function, something like that. I always wanted to be someone who actually gets to take that opportunity of working with really interesting people. And as I mentioned, a lot of them are so much better at doing what they do than I could ever be. And I think there's tons to learn from that. So we started building out, or I personally started building out, our investment operations across continental Europe then about 5 years ago. At the beginning of this pandemic, as I mentioned initially, and we've seen that this pandemic was one of the really catalysts and accelerators for a lot of new people starting something new. So it all started with people, I think, kind of, I always think of, we all were all of a sudden confined to our own bedrooms, kitchens, offices, whatever it might be, home offices. We were all looking at the same white wall again and again and again. And I think that led to many people questioning, what am I doing? What is it really that I'm contributing? What am I solving? What am I contributing to solving that, and then reconsidering their path. And then what we've seen thereafter was all sorts of different disruption, from geopolitical to really disruption throughout financial markets, starting with public markets and then going through later stage private equity, growth capital, and into the earlier stages of venture capital. And again, that disruption has actually led to super, super interesting people all of a sudden becoming available to be building something new. So what we've seen is a lot of people that have been working in grown-up companies, and in companies that are 5-10 years old maybe, for them, the opportunity costs of leaving and starting something new have all of a sudden changed, because their ESOP packages or their stock option packages that they hold all of a sudden have been repriced. So they may not be in the money anymore. They may possibly not be worth anything. But for many of them, they're definitely priced lower than they were. And also they had to shift the focus, right? So if you were in one such company that's undergoing more financial distress, you're not only focusing on growth, you're all of a sudden focusing on cost, you're focusing on consolidation and all those non-exciting things. So many people we've seen have jumped out of their previous leadership roles, and in particular, strong people with technical backgrounds. And that's something that, for me personally, is very, very exciting, because evidently people that can build great technology are very, very often the founders behind great companies that become industry and category defining in the years to come. We've by now backed a little over 1,400 companies. And our investment approach is generalistic. So we're industry agnostic and we're also technology agnostic. Why? Because we do believe that it's all about the people that are building that company. We need to find the strongest founders. We need to identify them. We need to work with them as they're building their company. It's less about picking a certain theme if you're that early, right? Because there's all sorts of influencing factors then to the success of that. But a great team, a great founding team will take two turns if they have to. They'll pivot the product. They'll pivot actually their market access. They'll pivot their go-to-market. They'll find a way to make it work. So we really zero in on identifying those founders that are uniquely suited to be building this very company, solving this very issue. And then we back companies that are in direct air capture, so that are physically sucking carbon out of the air. We back companies in cybersecurity. We back companies that are in water desalination. We back companies that are in solar energy. We back companies that are building platform businesses. We build companies in the e-commerce sector. So I think you get the idea. So really, when you think about the categories, when you think about the industries, there's almost nothing we wouldn't find exciting, as long as there is a big enough, urgent enough problem to solve, and as long as we see that the founders behind that company are uniquely positioned to actually be contributing to that. And then what we do is we work with them for a couple of months in one of our offices. That's what I mentioned with we have to come close to founders. So we invite founders into our offices, and by now we get about 150,000, a little bit more actually, applications from founders every year that say, hey Antler, I'd like to actually kind of work with you guys. I'd like to actually work alongside you, very often on completing my co-founding team, so finding other like-minded co-founders, expanding the network, getting access to initial and then further funding, and to have a lot of time to spar with you on really nailing down what is that burning problem that I'm solving. Is it urgent enough? Is it real enough? Is it big enough? And how can I actually crack that? And all of these 150,000 people are working on something at that very point. And so they've all already jumped into that adventure of doing something often again. So more than half of them are not building their first company. And we then invite a smaller part of that, only a couple of thousand every year, to join us in one of our offices. And then after working together for quite a while, we then get to become their first investor. But as I mentioned, we don't want to be their only investor on that journey. So we want to keep investing, but we want to make sure that there's other like-minded investors that are joining, because we're quite convinced that our portfolio will do much better if we team up with other investors around. So we're co-invested by now with hundreds of VCs around the world, also many family offices, many individual investors who are teaming up in order to actually support those founders who are quite like-minded. But let me pause there. So that's in a nutshell what I do, why I love what I do, and kind of how I got there.
You're correct me if I'm wrong, you're doing two jobs. You're helping, guiding, advising, helping put the team together. I always understood that you always look for other co-founders to join that. And then you're managing investments with probably some milestones that you want to see, and each milestone you'll add a little bit more. That's quite complex.
Yeah, I think it's probably true. Yes, we're doing these two things, and kind of they're a little bit more nuanced than in the end, right? And all of these journeys are quite different. But we're in the end, as an investor, you have to be I think generally you should be humble. As an investor, you should be more humble, right? Because you are the one who's standing on the sidelines, who's hopefully A, picking, and then B, supporting great people in building their companies, who are really then in the limelight of and in the spotlight, on stage, quote unquote, of actually building. So we don't build companies, right? That's not the business that we're in. We find great people, we support them in them building those companies. And I think we're very, very close in the beginning of that journey, particularly to make sure, because there's a lot of pattern recognition that you can put to good use at that point in figuring out whether that problem is really real and whether this founding team really has an unfair advantage in building this very company, right, and solving this very issue. But I think you're right. It's probably those two different aspects in what we focus on, but it all has to do with the people. So we try to identify the right people, and then we aim to work with them in order to make them be an even better version of themselves.
What are the miles? 'Cause, I mean, in a typical Antler approved founder company, it's probably a period of time that you're committing resources and support. Maybe, I don't know, it's 3 years, 2 years, 5 years, whatever. What are the milestones that you look for each one before you give a little bit more? Because I mean, it never goes according to plan. It's always better or worse.
It is. So I think the exercise of planning is a very important one, although it's a very frustrating one, because the only thing that you know is that you're going to be wrong, right? You've either vastly underestimated everything, or you vastly overestimated it. But the likelihood that you're actually gonna nail it exactly is very, very low. Still, you can't go without a good plan. Until you learn about reality being a little bit different. But I think that's exactly that's one of the elements. And then the second one is the journey of building, let's say, an e-commerce platform company or any platform company, versus building a hardware company with real kind of industrial grade hardware, versus building kind of a more complex cybersecurity software solution. Those are, and that's just 3 possible archetypes, are very, very different, right? So in the first one, launching a platform business, you're going to get to market with the first product very, very quickly. And then what you want to do is you want to learn very, very quickly from how the market reacts to that, how customers, how users interact with your product early on. If you're building a hardware solution, that may actually be quite different. And you're not going to be able to launch a product and put it to broad use within the first year, 2 years, 3 years, whatever it might be, right? So if you build a nuclear fusion company, it's very unlikely you're going to build a nuclear fusion reactor in the first half year of your company's journey, right? And possibly it's going to take you rather a decade or so in order to get there. So we don't approach this with kind of a standard milestone kind of playbook. But what we go through with founders is always thinking through, as you are building this company, what are the proof points that you reach that will then show to yourself, but to your customers, to other investors, to staff, so key hires, that you are on a great path of getting to becoming a very successful company, right? And kind of what I often do with founders is I try to roll it back from at the point where you're 10 years past your IPO, and everybody knows you've built a very large, very successful, very profitable company that's clearly contributing to having a lot of impact on people's lives. Now everybody knows that you're the right ones to do this. Now everybody knows that your product works. Now everybody knows that there is a market. But as you get there, there's a number of additional proof points or initial proof points that you need to get to in order to actually have that right to play and acquire additional funding. And when you go through that, through those early funding stages, raising an institutional seed round, raising a Series A, raising a Series B, raising a Series C round, then as you continue to grow, the market will have expectations of where you are. And they will have expectations of you having delivered, shipped your first product. They will have expectations around where you are from a revenue perspective, from a revenue growth perspective. They will have expectations of kind of you having proven that your technology outperforms others. But those are slightly different, and definitely they're differently spaced when you think about solving very, very different problems. At the same time, the availability of funding is also very different. So when you think about how do I fund my company in an early point, so if you're not lucky enough to just be able to finance it yourself, you're going to be relying on others. So one, you can make a lot of revenue. That's great. So if you can build a cash generating business early on, you're certainly golden. Two, you can probably not tap loans, kind of conventional loans at an early point. So you can't get to a bank and just say, would you lend me money? But you can raise more venture capital, or you can work with public funding, so with grants, really at that very point. And what we see is that really a lot of the more impactful companies are able to attract a lot more public funding to support what they're doing, because they are actually building something that has kind of a greater importance and greater impact on not only the founders' lives or their customers' lives, but actually the lives of many others around them. And therefore, a lot of public institutions are willing to actually be putting additional funding into that. But also for that, you need to go through developing your technology through kind of technology readiness statuses and levels in order to show, hey, I've got there. I've now built this, I've stacked this on top, I've solved this important reliability issue at this very point, and now I can unlock more. So we look for essentially then signals from the market alongside founders to then go into a next funding round. So we work with founders, introduce them to many other investors. We do that quite structured by now. We bring them together in what we call portfolio days or investor days with other investors that are often much more deeply focused on maybe just climate tech, or maybe just fintech, or maybe just blockchain technology, or whatever it might be, right? And for us, kind of their validation on top of the customer's validation are very, very important, very, very important signals. But the most important validation that you can see is always the customer validation. So do we see growth? Do we see growing demand? Do we see growing usage for a product? Is that problem actually real enough for companies, consumers, to be looking for new solutions to it?
You said that you start the initial investing and support. You filter, screen, and then you start investing. At what stage do you bring in other co-investors in your network based according to the industry preference?
So that depends a little bit. So as early as a couple of weeks after our initial investment, we don't want to hide anyone, right? It's not, even if we wanted to, we couldn't, right? So can be a couple of weeks, can also be months. Depends a little bit on kind of when founders and companies are ready to go out into the market more broadly. And that really depends on those proof points they've been able to build, right? So we as an investor, we're happy when we might meet an exciting person working on something big. Most investors are not satisfied with that. They want to see kind of 2-3 more steps. They want to see the complete team. They want to see the complete product vision. They want to see possibly a first product. They want to see possibly first revenues. They want to see possibly revenue growth over a period of time, right? So it's safe to say that we're usually earlier than others are in when we get excited about a founding team or a founder even only. And then we work with individual founders, as I mentioned, as early as a couple of weeks, and can go into a few months. We always work with founders also on figuring out, should you stay in stealth mode or not? Does additional attention on your company actually help you at this very point, right? And there's only one time you can leave stealth mode. And usually, you're a very small company, very small team, building hopefully something exciting, but not having built it yet. So you're not going to go with a big bang on Times Square. So your leaving stealth mode is a little bit smaller from a marketing perspective. However, it is the biggest marketing thing that you can do at that very early point. So you want to be somewhat deliberate about going out there and going into the market. But whether that's right away or whether you rather go heads down and build a product that you then can show, work with early customers that you can then present, is quite individual.
How do you match founders? I mean, it's probably more of an art than a science. You know, sometimes it doesn't work out. You know, with, oil and water might not mix. It might not gel, and all this statistics show. Okay, if we do this, and this person has these characters, it should work. But how do you decide this would be the right founder for you? And do you always require that another founder joins the company?
Yeah, that's two very, very important questions. So one, we do back solo founders, right? Because we do believe there's really, really, really strong people that have built and will build companies as solo founders. And it would not be smart as an investor to just have a rule that says, no, we don't do that, right? So that exists. However, we also know it's very, very, very hard to build a company, even as a founding team, from the ground up. It's even harder when you're on your own for two reasons. So one is very, very few people are exceptionally good at everything. And if you're a solo founder, you kind of have to be exceptionally good at everything. Right? But there are those people who are exceptionally good at quote unquote everything. And for them, it's actually possible to fill all these roles. But most of us are stronger here than they are there, or stronger there than they are here, right? So they have distinct strength in some areas, but it helps them more when they team up with someone who can actually fill those blanks. But we do invest into solo founders, precisely because those individuals exist. But the second element is your co-founders in building a company are really the only people that are completely at eye level in your company, really the only people that you can actually have the same expectations on that you have towards yourself. Everybody else you've hired, or they are an investor, or they are an advisor, or they are some sort of a stakeholder in building your company, but they're certainly not the exact same thing as you are. So they really are the people that A, you can have the same expectations to, but B, you can be hopefully completely honest with. And in figuring out who you're building with, having that honesty or that kind of capacity to be completely open and honest with someone is incredibly important. And what that means and what that needs is you need to actually have full trust.
Yeah.
You need to be willing to let that other person in, and you need to be willing to trust that other person that's covering a very different swim lane in building that company to stay in their swim lane and believe that they're going to do their job exceptionally well. So you don't have to try to do the same job, right? And it's very easy for you and I to kind of on paper figure out whether we would be a great match. right? So from a skill set, experience perspective, we can do that, right? We can say, hey, Robert, hey, Christoph, you cover this and that area of the business. So this should be the functional split that you have. And you are networked here, you're networked there. And if your profiles really jive for solving this very problem, super easy. So kind of when you only start looking on paper, you could piece founding teams together super easily. But unfortunately, you can't figure out whether our working styles actually work together, whether we build trust, whether we actually can more or less blindly trust each other, or how we think about the boundaries of building, kind of whether I like to work through every weekend and you don't, or the other way around, right? And those are small things where they seem small, but they can become great sources of friction in a founding team. And also easy stuff like who's the CEO, right? So kind of how do we think about, it's not a role per se, but it's a title. So how do we think about who takes on that role? And the only way to find that out is to actually start working together. That's at least what we believe. And that's what we do. Back to the point of why do we have so many offices? Because we need to be close to founders. Why do we need to be close to founders? Because we invite them into our office and let them work with other founders. Let them try out. For you, if you've worked with Christoph for 48 hours, if it doesn't work, you're going to know that after 48 hours. If it could work, you're going to have that hunch. It might work. So you're gonna say, hey, this Christoph, kind of, there's an interesting chemistry. We work well together. Kind of we complement each other well on skills. We already knew that, but we've looked into that a little bit. So we want to go deeper. We want to spend more time, and then that's exactly what you do. But it's very organic, and it's kind of, if you're one of the founders, then it's led by you, because you're the only one who will decide who they're building a company with, whether it's you alone as a solo founder, or whether it's you and one or two other individuals. We'll certainly have an opinion about that, but we don't provide that invisible hand, if you think of it, because we can't look inside of you. We can reflect on kind of how you work together, whether kind of you have good chemistry, whether it feels like that, and whether you're actually moving fast together as a team. That is simple, that we can do, but we can't kind of from the outset say, hey, Robert and Erica are going to be an amazing founding team because of this and that. And I firmly believe that also no psycho test or whatever it might be could do that. That can only be done through working together and then possibly falsifying that this is a great founding team. And you're going to know that relatively quickly. It's much easier to figure out who you don't work with well than figuring out who you want to go on a journey of 10, 15, 20 years together. And I think you don't necessarily need to have the full founding team stick together for 20 years. But if you don't have that full founding team plow through the first X steps of building and kind of stick together for the first couple of years of building that company, then it's really hit to your business and to the trajectory of the business. So as a founder, you really want to make sure that you get that ironed out.
Okay. The other thing that I wanted to ask you is, you had hundreds of thousands of startups or founders come through the door, and you got lots of people, but that's still a lot to process. Because one of the things that impressed me about Antler is that you're quite civilized. You know, you do give feedback. I'm sorry, this is not for us, or it's not going to work, or probably not a good idea to be an entrepreneur, which I think needs to be said more frequently, because not everyone has the grit to. It's not about genius; it's about grit and being able to take punches. How do you manage the flow of 100,000? I forgot the figure. It was over 100,000 that you're getting a year.
Yeah, I think first and foremost, that breaks down by region, right? So this is a number for an entire year. The year has 365 days. Not all of them are usually working days, but still there's a number of days, and then we are active in close to 30 offices around the world. So the number that each and every kind of partner and individual organizational unit will deal with is obviously a fraction of that, right? At the same time, it still is a very, very large number, right? And what we do is we try to get to know founders before we invite them into our office as well as we can. We have a number of interviews that we conduct in our investment team as well as with the partner team. We ask for references. So we ask to speak to someone who knows Robert really well. Right? So that could be the founders of the previous company you were with before. That could be a former boss. That could be a former co-founder. And in order to try and get a 360-degree picture of who Robert is, how Robert works, how strong he is, and what he does, and as you mentioned it, about Robert's drive and grit. So what's that source of energy? Why is Robert doing that to himself? Right. So going on the journey of building a company is, in the short run, a decision that doesn't make sense economically. Right. So you give up. Founders give up a lot financially, financial kind of security. They often come out of other roles where they could be making a lot more money cash-wise. It's very intense. The likelihood that you're going to fail is relatively high. And you still are willing to do all of that. Now, why is that? We discussed that quite openly with founders. What is it actually that gets you to know that this is what you want to do, this is what you want to commit to? And then the second part of that process is we work with founders day in, day out. So we have people in the same office as we do. So you learn a lot about that, right? So when you think about how much you know about your colleagues that are sitting in a similar office, it's similar for founders, right? Because you work together day in and day out. You get to know each other really, really well. And that then lets you gain a lot more insight in how people work, how driven they are, why they are actually going on that journey. It's never going to be perfect information because, as you said initially, this early stage investing, I think in a lot of ways, is more of an art than it is a science, right? So it's not about building a financial model that then spits out 4, and then we know it's a yes, right? So there's a lot you can do, and you can try and figure out. You can run numbers, but in the end, you won't know because there's all sorts of risks in the technology, all sorts of risks in the market, all sorts of risks in the team. So what you want to try and do is kind of bring down the uncertainty and bring up kind of what you know about how a team will tackle those risks, and then you want to back a team that you believe is incredibly driven, has that grit. It's very common that you need to speak to 100 investors in order to close a strong fundraising round, right? And that's very intense. It's kind of the speaking to investors is certainly interesting, with some more than with others, but it's certainly also intense because many of them will just not believe in you. They'll just tell you, no, I don't think so, right? I don't think that problem is actually real. I don't think you can solve it, right? And in the end, the earlier it is, it's usually going to be around an investor not believing in you. So you have to be equipped with thick skin as well when you think of that. Right? And we use technology to a certain extent, but you can't. Fortunately, otherwise I'd be out of a job. You can't replace a big human component in that in the work that we do. So we speak to hundreds to thousands of founders every year, in order to get to know them, in order to learn more about where they are on their journeys, why they're going on their journeys, what they're solving, what they know, what they don't know, what they want to figure out, what they need to validate, how they think about their co-founding team, and then invite them to actually come in, as I said, to work alongside us, work with us, which is then really a period where you can go quite deep, where you can understand, learn a lot, also quite casually.
What would the maximum that you would invest in one founder from Antler? Excuse me. What would be the maximum that you would invest as Antler?
So without wanting to speculate, the biggest investments, the biggest tickets that we've put in so far are $10 million US dollars in one round, one company.
So quite large.
That's obviously not at day zero, right? So at day zero, you typically wouldn't do that. But as the company matures, as they build more of these proof points, yes, and we're quite long-term oriented as well, right? So building technology, building a company takes time. We know that. So we know that we have to be patient. So we invest with a very long-term focus. We want to give founders the opportunity to actually build, solve, and then we commit more as they build those additional proof points.
Okay. If you've been around 10 years, I think, or the Antler more than 10 years?
Yeah, we've started in 2018, really.
Okay. All right, so 6 or 7 years.
But we're getting there.
In that time, have you ever studied all of the companies that you looked at and supported or rejected starting then, and all the companies that you supported and rejected recently? Have you gotten better at picking, or was the gut feeling as accurate as the scientific approach?
So one of the things that I can tell you for sure is we have the opportunity of being a lot more selective today. So by now we invest into about 2 companies per 1,000 founders that apply to us initially. So less than 0.5% of the initial deal flow is what we actually back, and we've gotten a lot more selective over time because we've grown the deal flow, the original kind of deal flow and applications to us quite systematically over time. So we now have the ability to actually be a lot more picky than we could be over time, right? Than we could be before. Sorry. The question of have you taken the right decision or not in a business like ours is very, very hard to answer unless you look back a relatively long time, because there's some companies that are looking for product market fit for 5 years, 3 years, whatever it might be, right? And then at some point they actually hit it and they start growing like crazy. And then there's other companies that are doing that a lot quicker. When you look at very, very big companies, the biggest in the world, Nvidia, for instance, was not always the biggest company in the world. It's become that relatively recently, right? So it's all of a sudden taken a trajectory that probably 10 years ago many people wouldn't have seen, me included, right? So I think it's in a lot of cases when we look at an investment that we've made a year ago, it's too early to tell whether we've been right or wrong. What we know is that we can indeed be a lot more selective, which gives me great comfort. And we see that the community of founders that we're working with, by now we've worked with more than 10,000 founders, and that's a very powerful community, because as anywhere, great people always know great people. So the amount of recommendations that we get from founders that say, hey, talk to this founder, hey, you should meet that founder, hey, I know this person, I've just met this person, then they they're doing something quite interesting, is growing quite quickly and quite rapidly, and that gives us a lot of really high quality inflow in the initial deal flow. And I think we've gotten better at supporting founders as well. So we've grown the global platform, the network. We've grown our partnerships that we have with a lot of technology companies that are working with companies around. We've grown our network of co-investors. As I mentioned, we're now co-invested with hundreds of funds around the world, and they know us better, they know the portfolio better. And that certainly is helpful to portfolio companies and portfolio founders as well.
There's a lot of money around, or wealth around. There's 5 times more wealth than there is GDP, global GDP. So that's $5 or euros chasing $1. Some of it is in real estate, okay, but in general, there's a lot of money. A lot of the VCs and PE firms, I'm sorry to say, are not good actors. They do not do a good job for their LPs or for the VC. And I just was thinking back of in 2 or 3 sectors that hoovered up tens of millions, billions of dollars that don't exist anymore. The 5-minute bicycle delivery for groceries, Getir and all of that, and online event software. Because we used to use one, and they had raised lots of money. I told them, listen, at a certain time, you're going to have to start making money. COVID will end. Oh, no, we're fine. And then she said, download everything because our investors have pulled the plug. So you take a much more reflective, maybe you take 5 minutes to decide with 100,000, but basically you look at these and you think about it. Can we add value at these? And unfortunately, a lot of the VCs never ran a company. They're bank, they're financial people who can read a balance sheet and that. How can there still is a big need for startup money, whether it's in Europe or Asia or Latin America or North America, yet it's still a big challenge for many startups to find the money because, as you said, it takes a lot of effort. It's farming, not hunting. And in many cases, it's toilet cleaning. It's not fun to do, but you have to do it every day. And startups, many of them are not good at fundraising, which should not be the most important skill set. You should be able to develop a product or a company. So how do we bridge that, or is basically Antler the solution?
I think so. There's a couple of different things in what you just said, right? So one is, yes, there are these hype cycles regularly, right? And some of them turns out the community was right. Some of them turns out the community was wrong, right?
Right.
And then in some of them, it's really due to very extraordinary circumstances. So the fact that there would be COVID, I mean, people have been predicting that there would be some sort of a pandemic for I don't know how many decades. Yes, but nobody knew when the hell that would happen. So predicting that this COVID pandemic would come in and then predicting what it would do, I think kind of anybody short of a crystal ball would have had a hard time doing that. And this has actually thrown over and accelerated a lot of businesses, and then over accelerated a lot of these businesses because for some reason, I think at least a big part of the world believed that we won't go to offices anymore. We won't have to leave the house for a lot of stuff anymore. Kind of our lives will change quite dramatically. Now, 5 years after the beginning of that pandemic, I think it's safe to say a lot of things have changed, but a lot of things have stayed exactly the same as they were before. So human interaction is still quite important, which is why kind of those events that work are events that are in person. And very few people go to an online event, right? Those online conferences. I've personally always struggled with focusing on that, because if I sit on my desk, then there's so many other useful things that I could do, and not go into breakout room here and breakout room there and listen to an interesting speaker there. And I think indeed people were wrong there. Ironically, in venture, it's not so costly to be wrong about a company that you've backed. It's quite costly about being wrong about a company that you haven't backed. Right? So if you've invested into a social network and that hasn't worked out, that's okay. You can only lose once your money, right? But if you've looked at Facebook and then decided not to invest, then that becomes quite costly to you as an early stage venture capitalist, right? I think what we know now is that private markets overall have raised probably a lot more capital than they could healthily deploy leading up to 2020, 2021. And I think that has indeed, by now it's pretty clear to all of us, that has indeed led to some behavior of the market that's indicative of kind of peak market behavior. And people have invested larger tickets at earlier stages into riskier businesses because they knew that potentially the outcome would be huge. Right? And that's then driven up valuations quite a bit into areas where the question of that you raised of how are you actually going to make money has been delayed quite a bit. And I think in the market environment that we're in today, it's come back to a way more healthy level of asking earlier, how do you make money? And if you don't do, how will you make money? How is this actually financially going to work? I think also that it has swung a little bit too far for a while into the other direction of people being too cautious. If you want to actually invest into something that's quite disruptive, you're going to have to be willing to take a lot of risk. It's brutal, but it doesn't work any other way, right? Innovation doesn't work without risk. There is a chance that it will go wrong. And people have to be willing to actually take on that risk. But they have to do that in taking on calculated risks, right? They have to do that at reasonable valuations. They have to do that at reasonable ticket sizes. And I think there we are in a market environment that's a lot more healthy than the market environment was a few years ago. And some people that I speak to kind of say, hey, Christoph, isn't everything very hard now in venture capital, right? And they kind of compare what's 2024, 2025 versus 2021, right? And when you do that, then you're going to get to the answer of, yes, everything is very hard today. However, I don't think it's a fair comparison to kind of say, I'm only happy when I'm at kind of peak market performance, peak market levels, right? That's not healthy. When you look at the longer term perspective, then we are at quite a healthy growth trajectory through cycle. And you quickly see that the years 2021, 2022 were the odd ones out, where there was a lot more capital raised and a lot more capital deployed, which then led to quicker hype cycles, I think. And some of those you've mentioned where really a lot of capital has in the end gone into my pocket because I've shopped with rebates for 10 minutes delivery. And now all that venture money has been redistributed to consumers. But I think the sector has struggled to actually establish a business model that's sustainable and that's actually producing profits. But that in the end is the only thing that counts.
What is the process for a founder to become, I probably don't use this word, antlernik, like a kibbutznik or an antlernik, someone who's part of your ecosystem and has been approved, etc. Is there an online application form? Because you've got lots of offices. Yeah. Should people just pop up, and go into the office? What's the procedure?
Well, so the more rare way is to walk into our office. It happens, or to put physical mail into one of our mailboxes in our offices. We've received very interesting contributions through that and met very interesting people. But that's, I think, fortunately, when you think about handling that flow, that's not 150,000 per year. So the majority of the vast majority of people we get to know through them putting an application through our website. So we have an application flow that starts on our website and makes sure that we're actually going to spend time on and with that individual.
Good.
But a lot of people we've met before, right? So a lot of people we've met at an event, at a conference, usually in-person conferences, where maybe we've been on a podium, maybe we've been having a discussion, maybe we've given a keynote speech, maybe we've talked about some important issue, or maybe where we've co-hosted an event in one of our offices, and then kind of lots of founders came to get to know each other and us. So often the dialogue starts before that, but then you would put an application in at antler.co. I think quite intuitive how to do that. We're going to ask you a number of questions around who you are, what you do, what you've built in your life before, in order to have an opportunity to get to know you a little bit better than just looking at, hey, this is my CV, right? And then we start with actually digging deeper into that. But as you said, we have offices all around the world, so we can be physically found, and sometimes we just have walk-ins.
Okay. A hypothetical situation. You have a founder who has a brilliant idea, easily scalable, but too dependent on the relationship of that founder with their network and the client. So there's not like this super advanced IT or chip that they develop. It's not a specific, it's a service, but it's service based on relationships. So you're very dependent on the value of the relationship, which is, what is the exit there? Have you ever had a situation like that?
Yeah, I think the very, very frequently, and it's by the way hard to answer both of these questions, right? The first question to ask at that very point is how's your business scalable? Right? So, and typically technology will be the solution to making a business scalable, so making outputs scale faster than inputs. And the second one is how do you make the business defensible? How do you build a moat around yourself? And technology is also only one answer to that, typically, because usually it's impossible to just build the best technology and then have the same technology for 100 years, right? So without constant innovation, you're not going to stay ahead, right? So if NVIDIA tomorrow stops spending lots of money on further product development and further innovation, they're not going to be on top of building the best chips out there. So it's an important question to ask at that very point. What could be sources of defensibility in what you're building, and how can you actually get there, right? But the first one is really, to what extent is it scalable? To what extent is it a venture backable business, right? So lots of services businesses are quite exciting businesses, but they're not necessarily venture cases because they lack that ability to scale it. They, if you think about consulting, maybe wonderful business. However, you're going to make twice as much revenue if you have twice as many people. Not necessarily, but you will not make 10 times as much revenue if you have twice as many people, right? So it scales very, very linearly, output as at the same rate as inputs change. So we try to figure that out in understanding how that business would work out, play out. Is there a believable way of building defensibility with the product that you're eyeing to build?
Okay. Two difficult questions. What is the part of the job that you love and that you don't like or hate? We can also cut that out if it gets you into trouble.
So I think the part of what I do that I really, really love is something that we've spoken about before, right? So we invest into people, and we back people at a very early point. And what that means is that I get to work with people that A, are very good at what they do, B, know a lot about what they do, C, are very passionate about what they do. And there could be all sorts of different stuff that I do not consider very, very interesting, and I wouldn't want to spend my Sunday on it. But that are very, very passionate about solving this very problem that maybe you and I have never heard about before. And that on top of that they have that unique energy because they are at the very beginning of building something new, and they just want to get started. And I feel very, very privileged about that. And that's fortunately a big part of my day in, day out job. What do I not love? I'd love to know quicker whether I've done the right thing. So when you think about that, and we've also spoken about that, gratification is quite delayed in what you do, right? So whether this founder that you really, really, really appreciate and are really, really kind of proud of having an opportunity to partner with and back them, you don't know whether the business is going to work out. So sometimes I'd love to actually have a time machine, a little time capsule, to actually just go into the future 10 years and know where we right, where we wrong,
Okay.
what are really the things, because there's so many unknowns in kind of what happens in the market, kind of to what extent is technology accelerating or not, to what extent kind of are customers and consumers shifting their behavior. And it would be easier if I had that time capsule and if I knew sooner whether that was actually right or wrong.
There's a big discussion going on over Europe versus USA, or USA versus Europe. Draghi wrote a big report. The problem is we don't have all of this dynamism and early stage VC. And if you just look at how many VCs there are in the USA compared to how many are there in Europe, there's a lot more. But it doesn't mean that they all get their money right away, because people read about the press release. Oh, this one raised 500 million, AI valuation of 20 billion. But that's the aberration. That is not the norm. And you're both in the US and Europe and in Asia.
Yeah.
Do you find a big difference structurally in each one, that it attracts more innovative founders that have the grit? Because Americans, I'm American. Americans are children. They love a new toy. Every week they want a new toy. So it's great for innovation, but doesn't mean that they stick with it. They also give up quickly and move on to the next toy. Do you see a difference in the geographic founders?
Yeah. So I'm European, and I'm a happy European. However, right now I'm in Asia, and I'm happy to be in Asia as well.
Okay.
So
where in Asia are you? Hong Kong?
Korea.
Singapore. Korea. Oh, okay.
So, yeah.
Nice.
So I think when you look at Europe, I think a lot of what is actually currently being said and debated is true, and kind of there's lots of things that need to be done, and kind of the continent could be so much more performant and so much more successful and so much more dynamic and so much more innovative with what it has in terms of resources. And the most important resource, I think, is talent. And I think the one great resource that that Europe has is super strong talent, great education, and that's the most important ingredient to starting a business. That's not the most important ingredient in getting through the growth stage and actually raising 500 million for it, but that is a very important ingredient, right? So it's a necessary but probably not sufficient condition to be building something great. I think when you look at the US and compare it to Asia compared to Europe, compared to the Middle East, you see that the venture ecosystems in different parts of the world are in very different maturity stages. So the US is probably a few decades ahead of Europe. And it's to a certain extent, I think, a comparison where as a European, you can look at that and say, hey, I'm horribly depressed because we're not there. Or I'm quite excited because I know that it is possible. It is humanly possible if we get our act together and actually can get there. I choose to be optimistic, so I choose to think about those opportunities that are out there. But I think indeed we see more dynamic right now in the US in the short term. But that's always been the case. So it's not since yesterday that venture in the US is much bigger than it is in Europe. As a matter of fact, Europeans have caught up quite a bit and kind of have grown very, very quickly. Right? So old Europe, when you think about where the venture ecosystems were 20 years ago, 10 years ago, we're light years further than that. And I think it's worth looking back actually what has happened in the last 10 years in Asia, because also there venture is not centuries old, and also in Europe. And I think there's a lot of interesting and very, very exciting companies being built. A lot of companies are not dependent on the one market that they work in because they need to be serving global customers anyways. However, if you are in a bigger market, it's easier to get started, right? And if you are in more fragmented, in particular from a regulatory point of view, markets, or from a language point of view, which kind of is probably the disadvantage that both Europe as well as Asia have, that we speak a lot of different languages. And work in all sorts of different regulatory regimes, then we're starting at a bit of a disadvantage. So it's even harder for us to be building. But I think that key ingredient of really strong talent, for me, makes me very, very positive and hopeful.
I had promised you and your team that we would try to keep it to 60 minutes, but we've gone over a bit. My apologies for that. Final point, how can we, or the audience that is listening to this and will listen to it, help you?
Well, so I think anything that helps our portfolio helps us. And anything that helps us get to know more great people that we can work with also helps us. Right? So if you're building a great company, or if you're thinking about building a great company, we'd love to meet you. If you know someone, if you know that Erica that's just about to start something new, we'd love to meet Erica. Right? If you are deep in direct air capture, if you are deep in cybersecurity, if you are deep in payments, if you are, as I mentioned, our portfolio is quite broad. And for all of you interested, you can find a very broad selection on antler.co on our website. Anything that helps those portfolio companies, be it from a customer perspective, be it from a technology partner perspective, be it from an investor perspective, we deeply, deeply appreciate and are very, very grateful for. So would definitely love that. And I think there's a lot of things that kind of are useful to companies at an early stage, right? Because they certainly have more issues than they have solutions at this very point. So everybody that offers a helping hand and offers access to a market is deeply appreciated.
And you're launching a new fund, or for the coming year?
Yeah, so with different fund strategies, as well as kind of individual funds, due to marketing regulations. I'd love not to go into detail
in that,
but for everybody who'd like to learn more about that, also that you can do through our website. With different products, in different geographies around the world, and would love to tell you more about it, obviously.
Great.
As well. So also that goes to antler.co, and we're gonna get back in touch.
Christoph, this has been a joy. Thank you so much for being very accessible, straightforward, honest. Maybe you should give some master classes to the other VCs out there of how to interact with founders. But thank you so much for this. And this will be ready shortly. I'll send you the link, and then Sam will process it to put on our distribution for podcasts. So thank you again.
Thank you
I really appreciate this. And
really appreciate it,
enjoy
Robert.
the bulgogi. Stay well.
I will. Happy Tuesday.
Bye-bye.
Speak soon. Bye.
Bye.